After last Monday's meltdown, we saw the S&P 500 came down and held this 30-week moving average cloud here. And also in addition to that, it reclaimed this near-term trend line and it ended the week nearly unchanged. And at one point during the week, the S&P 500 was actually down 4.25% on previous week close. Now, if we take a look at the Fibonacci retracement, we're also saying that we're looking for the price to close below the 50%, then we'd be looking at a 100% retracement. Well, on a daily basis, it did close the 50%, but right now it came back into this retracement zone, and that's between the 61.8 and the 38.2. So we'll be watching in the coming week to see would it be able to get it back above this retracement zone and push us up to the all-time high, or would it come back in and dip below this retracement zone and start retracing back down to this 100% level here. And in addition to that, we could also take a look at this Fibonacci retracement, and let me remove this here, and we see that there is a 38.2 near the 5,062 level. So we'll be keeping an eye on this level as well and see would it come down and dip below the 5,000 and enter this retracement zone. We'll take a look at a little bit more detail on the S&P 500 later on in this video. So be sure to watch the entire video to get the full context of what the market is trying to tell us. And for the Nasdaq 100, we saw the Nasdaq 100 held this particular trend line here, came down and got a nice bounce off of that Monday meltdown, and also recapture this 30-week moving average cloud. We finished the week with a small gain, a 72-point gain of 0.39%. And if we take a look at the Fibonacci retracement based on this swing here, we see that the price came down to nearly the 50% retracement and then bounced back up on that Monday meltdown. So right now we're going to see would it be able to continue to come up and move up back to the all-time high, or would it come back down and resume coming down here and try to get into the 50% mark and also move down to the 618, and that would be somewhere around 16,600 area. Now we also could take a look at this particular Fibonacci swing as well from this particular low here, and you can see there's still a little distance away. That would be somewhere around 17,000 for the 382. So we could see a little bit of a pullback and watch this level on the 17,000 area and basically testing this low here on the next pullback. And looking at this chart on the VIX here, don't worry about this here. This is a false print. This is the after hour or the overnight session, and the VIX doesn't calculate using the overnight session stat. So right now we see that it is still inside of this 20-30 zone, although it popped above the 30. So the market at one point, the early part of the week was quite fearful, but now it seems to be damping the little fear to a certain degree. So we'll see would it come back up to this 30 in this coming week, or would it dip back below the 20 level. And if we take a look at this sentiment chart here, here's the VIX again. We see it come back into this zone here between 20 and 30. So obviously the market participant is still fearful, but not as fearful as early part of the week. But the put-call ratio is still inside of this 0.75 and a 1. So that is showing a little bit of a in the hedge mode. So if we see it get above 1, then we basically conclude that the market or participant are very bearish. So right now it is inside of this 0.75 and 1. So the market participant are setting up a little bit more of a hedge to protect your position. But if it get below this 0.75, then we will begin to see the market participant getting a little bit more bullish and start putting back on risk. And looking at the up-down volume ratio, we see that the up-down volume ratio was quite dramatic on the downside on Monday with the Monday meltdown, and we're seeing it was over 12-1 in favor of the down volume. Now on Thursday, we got a little bit of a turnaround, and it was almost 6-1 in favor of the up volume. But notice that the advanced decline also fluctuate quite dramatically on the upside and on the downside. So the market is obviously getting quite nervous here and doesn't know exactly what to do. So it's just trying to jockeying for position between the bulls and the bear. And looking at the New York Stock Exchange new high, new low, we are seeing, the number of stock making new high came down pretty much dramatically from the, 2 to 300 level and now down to less than 50 on Friday. It's only got 47 stock make new 52-week high. Now, the good thing is the number of stock making new 52-week low is still relatively low. We saw only 55 stock make new 52-week low on Friday. So although we are getting a little bit of a negative on the new high, new low with more new low than new high, but the number is really small. It's almost like, neutral. We're seeing 8 more new 52-week low than 52-week high on Friday. And looking at the cumulative advanced decline line, we are not seeing much of a divergence here. So right now it's pretty much moving along with the index. And similarly, for the Nasdaq market on the up-down volume ratio, we also see a strong selling on Monday, and we got some strong buying on Thursday. And likewise, for the daily advanced decline, we saw a block market decline on Monday and a block market advance on Thursday. So basically, the market is just kind of reacting to news on the downside and the positive side. The strange thing is, on Thursday rally, they are actually reacting to a better than expected first-time jobless claim, which is, I believe, that number might be misleading here because there is a little bit of a conflicting reaction based on the market because they are looking at that the numbers are smaller than expected, claiming that maybe the economy might not go into a recession. But on the other part of the market is looking for the Fed to cut interest rate 50 basis point on September. And if they claim that the U.S. economy might be better than they were initially thought, then they might not get that 50 basis points. So it's a little bit of a contradictory move here, and that's why I'm looking at this market right now. It's really indecisive of exactly where it want to go. And here, looking at the Nasdaq new high, new low, similarly, we are seeing, kind of mixed bag as well. Although in the Nasdaq market, the number of 52-week low is outnumber a number of stock making new 52-week high. But the absolute number, the number of stock that actually making that 52-week low and 52-week high is still relatively low. So that's the good thing. And here again, the advanced decline is not showing much of a negative divergence, a positive divergence on a short-term basis for the Nasdaq, but we know that there is still this massive, huge negative divergence that we are waiting for the Nasdaq to get resolved. Now let's take a look at some of the key sector here, starting with the XLK, the technology sector. See that we did see a nice bounce here after the Monday meltdown, and basically came down to close to this 38.2 Fibonacci retracement, and also booked this channel, but it reclaimed this channel as it bounced. So right now it's still back inside of this channel. What I'm looking at basically is to see a little bit more continuation to move up and possibly forming a little bit of a lower high, and that would create this possibly a little bit of head and shoulder pattern for a lot of the market participants to start focusing on. And we basically are looking for this thing to come down and retrace back below the 50% retracement, possibly come down to the 618 at this 160 level in the near term. And who knows, maybe we could actually see it come back down to this 112, 113. But that's probably a little bit way off. Right now, we're basically looking for this, possibly putting a lower high and making this little bit of a head and shoulder type of a pattern for the XLK. And for the semiconductor sector, we also see that it had a nice bounce. It failed to come down and test this low here. So it seems to be holding above this low right now. Again, basically looking for maybe a little continuation on the upside and forming a lower high, and then work itself back down to put in a little bit of a head and shoulder type of a pattern And then if we see it to come down and break maybe possibly this trend line here at 180 initially, and then see what happened then. The oil was pretty strong last week. It gained 3.86% for the week, or 2.83 points. So you see that right now it's still holding this trend line here, or we could look at this as a little bit of an ascending triangle or wedge, whatever you want to call it. So we could see oil possibly trying to make it back up to this 83, 84 area and see would it be able to break away from that and come up to this 90 level. Now we could see a little bit of a back test coming back down to this trend line, and that would be at the 70 level. So keep an eye on the oil to see would it continue to move up and try to break this 83 area, or come down and retest this 70 for the coming weeks. And looking at the long-term bond, we see the long-term bond broke out a couple of weeks ago, and it tried to get up to this 100. It came up close. I think it was the high was 99. Let's see what the high is. It is 99.94. So 6 pennies shy of 100. So basically, are looking to see would this get it bounce back up in the coming week and get above this 100 and try to possibly move up to this 110 level, or would it come back down and get below this high volume node here, below the 93.34, and possibly come down and test this 90 area once again. Now let's take a look at the E-mini S&P 500 future, the ES. We initially saw that the ES came down and dipped below this low volume zone here on Monday's overnight session, and then bounced back nicely throughout the day. Then on Thursday, with the jobless claim number, we also saw it came down and dipped down and test this low volume zone. And once again, it got a nice bounce back up. So right now, we're basically looking at the possibility of getting to this low volume zone up here and work itself up to this high volume zone here. And you can see that actually it came down and dipped below the weekly range on Monday, and throughout most of the week, it was kind of hovering at the lower range of the weekly expected move. So basically right now, we are looking at the price to see would it get to this low volume zone. And for the coming week, the market is pricing in the upper range somewhere in the 54.80 area, and the lower range is between 52.55 and 52.05. So what we be watching for the coming week to see will the E-mini S&P 500 come up and make it to this 5400, get above it, and come up to this 5480 area, and possibly test this descending trend line. Now, if we could break this trend line, then we'd be looking at this high volume zone here at 5526 area, and that most likely will cause a little bit of a resistance. And on the downside, if it get rejected from this low volume zone, then we expect it to come back down and possibly retest this low here, because we're looking at this two distribution, or the balance area. So if it break this low volume zone or this low volume, then that separate this distribution and this distribution, then once it breaks to this zone here and dip below the 5200 area and get down below this 51, then we basically are looking at the possibility for the E-mini S&P 500 to come down to this low volume zone here, and that would be somewhere around 4850. And for the SPY, the ETF for the S&P 500, we also notice that it dipped down on the overnight session on Monday, and it dipped below this 510 area. Now it did get a nice bounce back throughout the regular trading hour session, but again, it basically sit around this lower range of the weekly expected move throughout the week until Friday and Thursday after the jobless claim number came out and got this nice dead cat bounce. So right now, we're basically looking at the possibility to see will the SPY be able to get above this low volume zone here. And for the coming week, the market is basically pricing in the upper range of somewhere around this 544 area, and the lower range 521.90 and 517. So what we'd be watching for in the coming week is to see would it be able to get to this low volume zone and come up to this high volume area and basically testing this trend line here, and also in confluence with the upper range at this 544, 545 area. Now, if it doesn't break through this low volume zone, and instead, if it come back down, let's say it get rejected, then we'd be looking at initially this high volume node here at 530 to see a little bit of a support before it breaks down and come down to this low volume area. Come down to this lower range area between 521.90 and 517. Then we would possibly see a retest of this low here down under this 510. So keep an eye on this move, to come down, because we're basically looking for these retracement, right? Here's one distribution, and there's another distribution, and then there's another distribution down here. So once the price, break through the one distribution area and move into the other distribution area, then we will see the price will try to go to the entire range of that distribution. So that's why I'm looking for the price to come up before it get rejected and pushes back down. Then it will complete the auction back up into this distribution area before it come down to this next distribution. Or if it able to come up and break this low volume zone, then I expect the price to come and auction possibly back up to this particular distribution, or even might come up and make a new all-time high. But that's getting ahead of ourselves for now. So we're basically looking for this trend line here, and also this low here from last Monday. So in summary, we saw a meltdown last week and got a nice bounce off of some support area here. And right now, we're basically looking at the SP 500 being down for 4 consecutive weeks. So I wouldn't be surprised to see a little bit of a continuation on a bounce from the latter part of last week. Because if we come back and take a look at this area here, where we have 4 consecutive down weeks, we saw a couple nice brief bounce here. Similarly, down here, we also saw a nice little bounce after 4 consecutive weeks. So will we see this in the coming week? Maybe. It's no guarantee, but at least, based on the recent past that we saw the little bit of a bounce coming through. And also looking at the sentiment and the internal, we did see a little bit of indecision, between the up-down volume, advanced decline, and also new high, new low that did not deteriorate when we saw this meltdown here on Monday. And in addition, that we see the fear, the VIX came down from the elevated level above 30 and came back down to close to 20. So I wouldn't be surprised to see that VIX come back below 20 sometime of next week before the CPI release, because we have the CPI, the inflation data coming out later this part of this coming week. So be aware of that. So again, just be cautious. I think the pullback is still have a little bit more downside to go, but although we could see a little bit of a bounce, continuation of a bounce before we resume on the downside. Now, if you find this video to be informative and useful, be sure to smash that thumbs up to give it a like to help promote this video on YouTube. And be sure to click the subscribe button if you are new to this channel to help support the channel. And again, if you like to see more content from me, go visit my newsletter at Substack. The link is in the description below, and it is smtraderca.substack.com. Thank you for watching, and good luck on your trading.